Yeah. Hi friends, let us now revise Accounting Standard 7. Okay, first I will discuss this. Construction contracts. Even though the name says it is construction contracts, okay, right. It is, name is actually it should be like revenue from construction contracts. Revenue. It is nothing but sales. Revenue means I told you it is sales. It is sales for whom, sir, basically. This standard is applicable to contractors. Okay, contractors. But not for contractee. It is not for contractee. Okay, who is contractee? Suppose I am asking, you are a contractor. Yeah, I am asking you, please construct one building for me. You will construct. I will pay you some money. That is nothing but sales for you. So for you, it is the standard. Accounting standard 7 is applicable. For me, yes, no, it is not applicable. Why, sir? Yeah, but for contractee, yeah, you constructed one house for me. That may be a PPE, property planted equipment. Correct. Now, so I may need to refer accounting standard 10, accounting standard 13. It can be an investment. Maybe I am getting it constructed to give it to rent to somebody, or capital appreciation, or some other purpose. Or I may be referring accounting standard 2 if my business is getting constructed by you and sell it to somebody. Right. That is it depends on my intention, how I wanted to use that same building. Okay. So it is applicable to whom, my dear? Contractor ko it is applicable, but not for the contractee. Okay, what is construction contract? So the definition is very simple. It is a contract for construction. It is a contract for construction of a single asset or multiple single or multiple assets. Single or multiple assets. Yes, it is a single asset or multiple assets. Yeah, multiple assets, it says like which are interdependent and interrelated based on the technology, based on the ultimate usage, and many other things. Okay, but not only this, actually this construction contract, now onwards I'll say CC, construction contract. This construction contract includes, what it includes, sir? It includes, first point, what we say, it includes the service contracts directly related to, correct? It is service contracts, yeah, service contracts directly related to, yeah, directly related to what, sir? Directly related to construction work. Yeah, suppose, yes, there is some civil engineer, example, civil engineer job. A civil engineer is there. What does he do, sir? Yeah, he is participating in the construction job. He does the, what planning he will do. He'll take care, correct me, monthly he will go, he will go whether construction is done perfectly or not. He will check, and accordingly he will charge. Got my point? Yes. So he's going to get some fees. That fees it is not dealt by accounting standard 9. It is not dealt by accounting standard 9. It is dealt by accounting standard 7. Why, sir? Yes, why means this guy's, the civil engineer's work is directly related to construction. That's why. Even labor contractor, yeah, that guy work also is going to be dealt by accounting standard. He also has to record his, correct, income, revenue, basically as per accounting standard 7, but not as per accounting standard 9. And not only that, it is a contract for destruction also. Contract for destruction. Okay, contract for destruction. Yeah, sir, just now you told construction, now you immediately are destructing also. Right? No, it's not like that. Contract for destruction, contract for restoration, okay, rehabilitation, etc. All these things. Basically, these contracts also will take a lot of time, actually, time consuming. Yeah, here in the standard, now why they kept accounting standard 7 separately? The only reason is it is taking a lot of time. There may be one fixed amount or whatever variable amount. That fixed amount has to be booked over a period of 2 years or 3 years or 10 years, correct? How are we supposed to regard it? Correct. How do you allocate the total revenue among the years? That is the basic objective of the standard. So even destruction work also is not that easy. Restoration, I will tell you a good example for restoration. Yeah, I went to one company where they'll manufacture cement manufacturing company. Okay, yeah, they will be taking some mines. They will have mines, actually. They have mines for that, the raw material, basically. Okay, that raw material name I forgot, doesn't matter. Okay, hectares of land, actually. Government will give them on lease. Okay, they will be digging this material, and they will be digging the material, and they will be making the cement. Correct. But as per the agreement, what are you supposed to do? What are you supposed to do after you suppose 40 years you have digged and 40 years you have extracted that material? Perfect. After 40 years you have to restore it. You have to bring it to, yes, you have to make it flat. Earlier how it was, you have to bring it to back to the original position. Correct. Now that will not happen in 1 day or 2 days. Hectares of land actually it is. So it will take months and years of time actually. So for that also there are contractors who will do this filling job basically. Those contractors are supposed to follow again same thing, even though it is not, there is no construction job, but still they are supposed to follow the same accounting standard 7. Hope you understood what is the definition basically. Okay, right, sir. Okay, sir, how do you recognize? How? Correct. Now how to recognize? How to recognize or how to measure it, sir? How to recognize and measurement basically. Yeah, see, how to recognize and measurement basically, my dear. The standard says, yeah, recognize revenue, recognize based on percentage of completion, recognize based on percentage of completion. Yeah, recognize based on percentage of completion. This is what we are saying basically. Recognize it based on percentage of completion method. Okay, na? Percentage of completion method you are supposed to follow. Correct, sir. But how do I calculate what is the percentage of work is completed? Correct. Now, next question. How do you calculate? First method, what we say, surveyor method. Yeah, surveyor method means a surveyor is nothing but again an engineer. Okay, he is an expert. So he will visit the site on every year end. Okay, and he will have his calculation. So he will certify, yeah, this much 25.25 percentage work is completed. He will certify based on that. So 25.5 percentage will be recognizing in that year. So far how much percentage work is completed, that he will determine it. That is one method. Second method is what? Cost basis. What is this basis? Cost basis you can actually do it. Sir, how do you do on cost basis, sir? Yeah, cost basis, yeah, percentage, how do you calculate? Total cost cost incurred till date. Cost incurred, yeah, cost incurred till date. Yeah, till the date, till the balance sheet date, how much cost you have incurred, divided by total cost of construction. Total cost of construction, total cost for constructing 100% of the job into, you want percentage, that's why you just keep 100. That's it. So from here you will calculate. What is this calculate? This is the percentage of completion. This is percentage of completion till date. This is the percentage of completion till date, till 31st March 2020. You must have started 1-2 years before. Okay, but from the date of starting to till 31st balance sheet date, how much percentage of work has been completed? Okay, right. Here again, sir, cost you are telling. What do you mean by cost, sir? Cost is nothing but, my dear friend, it is contract cost. We use the word. Okay, sir, contract cost means, again, what do you mean by contract cost? Yeah, try to understand. Okay, contract cost means, okay, contract cost means it includes basically specific cost. One is a specific cost. Yeah, next is allocable cost. Next is allocable cost. The next is other cost. Okay, other cost. Specific cost, allocable cost, other cost. Sir, what do you mean by specific cost? Specific cost means the cost which is specifically incurred for the project. Yeah, say there may be, I am constructing one building, I am a contractor, I am constructing a building, I am constructing a road also. Yeah, two projects are going simultaneously. Yeah, what have I'm supposed to find out what is the percentage of done for building separately, what is the percentage of work for the road also separately. I have to calculate basically. Okay, so this percentage for the building, how much percentage of building construction has happened? Correct, that is the point, right? Yes, how much percentage it has happened. Now how do I calculate? What is the amount you spent only for the purpose of building? Only for the purpose of building, specifically, that is, what do I say, specifically incurred. Yeah, specifically incurred for the project. Yeah, how much you spent specifically only for the purpose of, means what do you mean by that? I'll say whatever the raw material you spent, whatever the labor you have spent, whatever the overheads you have spent. Correct, na? Everything, all those costs, whatever you have spent for that, even bidding cost also. What do I say? Bidding. Yeah, bidding means what, I hope. Correct, na? Auction, or not exactly auction. Government is offering. correct na? I can go and quote my price. I can say I will construct this building for this amount. Yeah, but for bidding cost means first I have to prepare one project report. I have to get it done through one engineer. He will make one project report for me and I will submit the same thing. But I have to pay to engineer. I may need to make some payment for when you are placing and bidding. Na, you have to make some payment to government. All those costs. Yes, that is also specifically for the purpose of what? This only. Got it my point? And even what is that borrowing cost? Yes, borrowing cost as per accounting standard 16. Yes, this is also going to be part and parcel. Correct. Next, even some depreciation. Depreciation of what? Yeah, suppose there is a lorry. Okay, na lorry. This lorry is being used by. This lorry is used for the purpose of construction of this building only. So this is dedicated for this. Then depreciation of that lorry. Maybe my building I will construct in 3 years. Lorry life is 10 years. Correct, na? But 3 years depreciation is nothing but that is depreciation of the machines. Correct, na? Which is used for the purpose of the specific project. Correct, na? The something like that, which are all directly attributable to this. You are supposed to do it. What is allocable cost? Allocable cost means from the name itself you can make out, my dear friend. What do you mean by allocable? It is incurred. It is not related to one asset, one project. It is related for more than one project. Then what are you supposed to do? On a rational basis, you are supposed to allocate it. Yeah, what did I say? Cost incurred. Yeah, cost incurred for more than one project. Yes, for more than one project. Yeah, it is incurred for more than one project. So what are you supposed to do? On rational basis. Yes, on rational or systematic basis. Yeah, systematic basis. What are we supposed to do? Systematic basis, we are supposed to allocate it. On systematic basis, allocate it. Correct, na? Yeah, suppose there is an engineer. Okay, this guy is employed by us. We are the contractors. This guy is taking care of the building and this guy is taking care of the road also. Correct, na? Right. Now what are we supposed to do? I can't put full of his salary only for the building, full salary for the purpose of road. What should I do then? I am supposed to allocate it. Like example. Example. What do you say example? Supervisor salary. Yes. Supervisor salary. Supervisor salary. At the same time, depreciation of assets. Depreciation of assets, why you, sir? Suppose this is same lorry I'm using for the construction. That lorry is carrying the goods related to building construction as well as for the road also. Then what am I supposed to do? Total depreciation is supposed to be allocated based on number of days it spent for this number, whatever, some reasonable basis. Costing. Correct, na? Right. Allocation, accordingly you are supposed to allocate it. Suppose you have paid some insurance premium. Kya bola? Insurance premium. Suppose the contractor has taken insurance policy, something like that, not life insurance, right? Okay, for construction purpose, because something happens in construction, na? Then instead of he bearing, insurance company will bear. But he has paid lump sum amount as a premium. Now that premium, what am I supposed to do? Allocate it. Premium also supposed to be allocated. Are you getting my point? Something like that, which you have incurred not specifically for one project, you have spent it for more than one project. Okay, now I want to tell one more small point. Yeah, let us say some depreciation. I'll give some clarity actually. Yeah, suppose there is a cost of some machine. Okay, let us say some 100 lakh rupees, one lorry, 1 crore rupees, assume. I don't know how much it cost. Okay, sir, I am following SLM method at the rate of 10%. I am following depreciation. Depreciation for the first year is equal to 10 lakh rupees. Depreciation has come. Correct. Okay, there are projects A, there is project B, there is project C. 3 projects are there. Okay, what happened? This lorry, assume that we have used it for 100 days for A project, 100 days for B project, 100 days for C project. Okay, and 65 days this was idle. Idle means khali, bekar. I kept it aside. I did not use the lorry for 65 days. Yeah, but total depreciation per annum is equal to how much? 10 lakh. Now, are you supposed to allocate it or not? Yes, we should allocate it. How do you allocate it, sir? How do you allocate, my dear? Okay, 10 lakh rupees into 100 divided by 365 only you should take. Yeah, 10 lakh divided by 100. This 100 over divided by 365. Like that you are supposed to take it. But what about, sir? Yes, and under this situation, there will be 100 into 65 divided by 365 bhi aayega na? Correct. That is not supposed to be allocated because it is idle depreciation. Idle machine depreciation. This should be charged to P&L. This should be charged to P&L. Right. Do not allocate it. Yes, you are not supposed to allocate, my dear friend. You're not supposed to allocate it. Remember this. Okay, fine. What about this other cost, sir? But my dear, before getting into other cost discussion, first you have to understand the contract cost does not include what. Okay, right. Let us look at that portion now. Yeah, contract cost. I'll say CC. Okay, CC does not include. So it does not include what, sir? Yes, it is not going to include. Means my contract cost does not include number one. The basic first thing what it does not include, sir. First thing what I say, it does not include general administration cost. Yes, general administration cost never be part of the any specific project. It is the cost of the company. It is not specific to any project. Right. At the same time, selling and distribution overhead. Correct. Now, selling and distribution is after construction of the project, not before. Correct. Now, that's why this cost is not allocable for making the asset ready. Got my point? Yes. Third one is abnormal loss. As usual, anytime abnormal loss cannot be capitalized. You cannot say this is my right. That should be charged to P&L, my dear. Okay. Next, fourth, idle machinery depreciation. Idle machine depreciation, just now I told you. Now this is also not part of my cost. Okay. Next, what is that? Material lying at site. Okay, material lying at site. Yes, there is some material. Material lying at site means material is not consumed. Na? It is an asset for us. It is not a cost for us. Correct? Na? When it is used for the purpose of what? For the purpose of construction, that day it is cost incurred. Till that day it is not yet consumed. That's why it is not cost of my project. So you cannot allocate it to anything. Okay. At the same time, my dear, R&D. Okay. What did I say? R&D cost. Yeah. Suppose contractor, I am doing research and development. Why are you doing research and development? How to construct in better fashion. Yeah, people, there are a lot of companies. I mean, all these constructing companies will spend crores of money for constructing. Correct? No? Metro. Now people are constructing metro. How is that? It is also an outcome of research and development, my dear. Correct? All of a sudden, somebody did not get a dream like this. We can construct. Yeah, it is obviously. They're making a pillar properly so that the train will go on the pillars. Correct? No, it will run. Yeah. This all research and development is very much required for the construction job also. Yeah, but see, if I do research and development, my dear, if I get some knowledge, knowledge is not useful for only for this. Suppose, okay, I did some research, L&T company, I did some research, great research I did, I agreed. I got some knowledge of how to construct metro, correct? Na? But is it only for this Hyderabad metro, or only for Bangalore metro? Not like that. Na? This will be used by any metro. Correct. Now onwards, whatever I construct, everything it is applicable. It is not specific to any particular project. That is nothing, but it has to be given. It is my cost. It is the company cost. It is not related to specific cost. That's why you should not take it. But yeah, why did you teach this point first? Yeah, if the standard specifically says general administration cost is obviously, I told you, it is not part of it is in generally it is not part of the cost of construction. Okay, right. But if agreement specifically says, kya bola? If agreement specifically mentions, what it is mentioning, if agreement is specifically mentioning, right, correct, na? Administration cost also is going to be part of the cost, then you are supposed to take it. Even R&D cost also, if they mention that also, these two items, if it is mentioned very clearly specifically, then it is going to be part of construction cost or cost of construction or contract cost, basically. Got my point? Otherwise, generally no. If it is specifically mentioned, you are supposed to take this information. Getting my point? Right. Sir, you told contract cost, correct, sir? But what about contract revenue? Yes, this is also one good definition. Yeah, contract revenue. Contract revenue, even though it is fixed price contract, it will change. How it will change, sir? I will tell you, day one, that is Y0, there is an agreed amount, correct? Na? There must be agreed amount. We must have told, hey, you construct this 3-floored building, I will pay you 1 crore, something like that. Okay, correct. But yeah, it may be taking 3 years of time. In this 3 years of time, what will happen? Will you be correct? Today you gave some model, one plan you gave. Yeah, my wall should be like this. my window should be like this, my door should be like this, floor should be like this, correct na? Interior should be like this. You gave very specific, clear specifications you already provided. Got my point? Yeah. Hope you understood, correct na? But subsequently what can happen, my interest may change, correct na? Earlier I said you don't need to construct my compound wall. Now I am asking you have to construct compound wall also. A contractor will construct it. But the point is, why will he construct for same money? Earlier for 1 crore, now he says, sir, compound wall will cost you another 5 lakh rupees, pay me 1 crore 5 lakh rupees. That's why what will happen, that agreed initial money change in the specifications. Yes, if you change the specification, obviously what will happen, my dear friend, he will ask for a bigger amount, obviously, correct na? So that's why change can be either plus or minus. Maybe earlier I asked for penthouse, now I said no, I don't want penthouse. Now why will I pay same amount? Obviously I will reduce some money, correct na? Correct, something like that. And even for escalation, yes, correct na? You have already learned escalation clause. If there is any escalation clause in the agreement, yes, for that reason also it will be changing, correct na? If there is any penalty, penalty, if the what is that, customer, I mean I am the contractor now, if customer has not given perfect plan or something, correct, suddenly he comes and changes, I lost something, and obviously he's supposed to pay me some penalty. Why will I bear that loss because of this man, correct na? So even that penalty will be part of it. Got my point? At the same time, okay, right, at the same time, what is that, performance bonus or something like that? Not exactly performance bonus, I will say, I'm not getting the right term. Okay, if you construct the work in time, okay, what did I say? If you construct the work in time, suppose I said 3 years, customer told me, sir, 3 years may if you construct it perfectly na, then I will give you this. Okay, I told you already 100 lakh rupees, I told you I will give you 5 lakh rupees extra. Fine, 5 lakh rupees extra milega, but when is this? Subject to the condition, correct? So E3, right, that is also is going to be my contract revenue. Is it an income to the contractor or not? Yes, whatever the reason. But listen carefully, ma. This performance bonus or whatever I call, correct na? Some gift, I mean extra money I'm going to get. When can I say this 5 lakh rupees I'm eligible? Only when I construct within 3 years of time, correct na? But can I tell first day only, yeah, I'm going to construct pakka for 3 years? No, my every construction is unique. You must have constructed 100 houses. Got my point? But maybe this house may become specific different one. No one knows it. That's why what you say, you recognize it only when it is in advanced, right? Recognize it only when construction reaches advanced stage. Construction reaches advanced stage. Yeah, means if you say, right, 1 second, construction reaches advanced stage. Advanced stage means like, sir, nothing left, I'm sure I'm going to get. I already completed 2.5 years. Within 1 month I am going to construct. He gave me 3 years. So that money 5 lakh rupees also mine. Then you take it into revenue. Otherwise you should not take it. Even this penalties also, there should be guarantee. It should be measurable. First, what the standard says, it should be measurable is one. At the same time, not just measurable. Yeah, not just measurable. It should be agreed. Correct, na? Yeah, agreed by parties. We are asking the customer to pay. What customer is saying, no, I cannot pay you this much. Then how can I take it? Correct. It should be collectible also. Na? If it cannot be collectible, by taking revenue, what is the maja you are getting? Nothing you will get. Correct. So even though it is a fixed price contract, my dear friend, right, it may undergo change. Kya bola? It may undergo change due to these reasons. It may be because of the change in the contract, I mean specification, there may be escalation clause, there may be a penalty, there may be because you have completed the work in a good quality and within the time, then you may be getting some extra money, correct na? Due to these things, it may undergo change. Got my point? Right. Next, one more small point. Yeah, sometimes what happens, my dear, yeah, then I'm getting contract number 1, contract number 2, contract number 3. This question was asked in the examination 1-2 times. All this, assume these are all road contracts. What are these? These are all road contracts. What government is telling? Hey Ravi, you want contracts? Sir, I want, sir. And then what he says? Yeah, we will get you all the 3. That's it. Yeah, you will get either 3 contracts or you will get 0 contract, nil. Correct. It is like Right, come Ravi, will talk. Right, Ravi, I will all together na, I will pay you 5 crore rupees. Can you construct it? No sir, you please give me 5.25. Okay Ravi, I will pay you 5.25, you construct it. So the bargaining, the negotiation is taking place as a package. Kya bola? It is as a package. Yeah, even though this is one road, Hyderabad road, this is Bangalore road, this is some Visakhapatnam road, something like that. It may be different roads, could be, but still, I am getting it as a package. The discussion of revenue is discussed not as e road ko kitna deta sir, आप कितना करेंगे, ये रोड को कितना देगा आप. No, discussion is not happening specifically for one road. Discussion is happening for each road separately. Under that circumstance, my dear friend, correct na, you have discussed it as a package, not as a, what do I say, it is, you discuss it as a package, not single. That's why even though there are 3 different roads are there, 3 different assets are there, all 3 different assets will be taken as a single contract. It is taken as a single contract or single asset. Yeah, the minute I decide it is a single contract or single asset, my dear friend, how are you going to do this, sir? Yes, single percentage only, single percentage of completion we are going to do it. Single percentage only we are going to do it. Got it? Right. This is example number 1. Let us say example number 2. Government gave, Ravi, whichever contract you want to take it. Whichever you want. Sir, you want one, you want to take only one. Other 2 not required, not mandatory. But I liked all 3, I took all 3. Yeah, we had a discussion separately for this contract ko how much, this contract ko how much, this contract ko how much. I had an option to select whichever I want. I liked all, I took all. Correct. Now under that circumstance, there are how many contracts, my dear? There are 3 contracts in this situation. How many contracts are there? 3 contracts are there in this situation, my dear. In these 3 contracts, are you getting my point? In this 3 contracts, obviously what do I do? 3 contracts, 3 separate percentage, 3% of completions I am supposed to compute it. It is like that. Hope you have understood something. Next question. Question is what? Can we measure revenue reliably? Can we measure? Yeah, can we measure revenue reliably on the balance sheet date? On the balance sheet date. What is the first question? What is the answer for this, sir? Yeah, if you say I can measure it, yes sir, I can measure the revenue from the contracts on the balance sheet date reliably. I know how much I will get. Okay, then what we'll say, yes, you follow percentage of completion method. Just now I said, no, what is contract cost divided by total cost? We can calculate it. Percentage of completion method, you please follow. The minute you say, no sir, I don't know, I have a doubt, sir, there are contingencies involved. If this happens, I will get this much money. If that happens, I'll get this much money. Something like that. It is depending on some future events which are not under the control of the entity. If you say that, then what they say, right, percentage completion method you are not supposed to follow. You are not supposed to follow percentage completion method. Sir, if I don't follow percentage completion method, then what should I follow, sir? Correct. Now, if not this, what should I follow? What you should follow, my dear friend, what the standard says, right? Whatever is the cost you have incurred, that is equal to revenue if collectible. That is what? If collectible means, is it collectible? Suppose example, yeah, this is my P&L. Okay, fine. How much you spent so far till the balance sheet date? Sir, I spent 100 rupees. First question will ask, yeah, will you be able to collect this 100 rupees from the customer? I can collect it. This is situation number 1. Then what we say, revenue is equal to 100, then gross profit is equal to 0. Why, sir? Obviously, when you don't know how much are you going to get, then how can you book the revenue profit also on this? You don't know first of all how much you will get, then you want profit in it also. So obviously that's why standard does not permit you to take it. Okay, right. So second situation. So second situation mein is correct na? Say let us say cost is equal to 100 rupees I spent. But sir, I can collect only 90 rupees any under circumstance. Okay, then revenue is equal to 90 only you are supposed to. Fine, no problem. Gross loss is equal to 10 rupees. You have to recognize it. Got my point? right? When you cannot measure the revenue reliably, then the cost is equal to revenue when it is collectible. If it is not collectible, how much can be collectible? That will be your revenue, but not more than that. Hope you have understood my point. Next, under one more last point. With this we will be able to complete this revision. Okay, in this situation what will happen? Yeah, in this situation what I say, right, you have to, whenever, this is not only at the beginning of the year or any time, okay, anytime during the construction period, okay, whenever you are expecting there is an expected loss. How do you say there is an expected loss? Yeah, when I say your revenue is less than the cost, correct? Now, revenue less than the total cost. Total cost means what? Total cost means so far what you have incurred, that plus whatever you expected to incur. Yeah, expected to incur. Yeah. So total cost, if the revenue is less than the cost, then that is nothing but difference, is nothing but loss. Okay, fine. So then what am I supposed to do? If there is an expected loss, what the standard says, recognize it immediately. Recognize immediately. Yeah, recognize it immediately. Irrespective of. Yeah, irrespective of what? Irrespective of three things it is telling very clearly. Irrespective of what? Irrespective of what is the percentage of completion. Yeah, irrespective of percentage of completion. Sir, I completed only 20%, so shall I recognize 20% of loss? No, not allowed. 100% loss. Recognize immediately 100% of loss. You have to book 100% of loss, not less than that. Okay, what about the second situation? Irrespective of completion, irrespective of whether started or not. Yeah, whether your project is started or not, we just don't care. We just do not care whether you started, not started, but still you are supposed to book the loss. Next, third, maybe the revenue from other contracts. Revenue from, I will explain, the revenue from other contracts, of same contractee, okay. This is the third one that will also to be considered. I will tell you. I got a contract A, I got a contract B, I got contract C. 3 contracts are there. All are coming from Mr. X. Mr. X gave me all these contracts. Okay. From contract A, I am making a loss of 10 rupees. Okay. What am I supposed to do? I have to book it immediately. You have to book full immediately. Immediately you have to book the loss. 1. Second, situation number, I am getting 50 rupees of profit here. I am getting 60 rupees of profit here. Even though from the other contracts of the same contractee I am making a revenue profit also, you cannot offset. It. You have to book this immediately. These two numbers you have to follow percentage of completion method. Only supposed to be followed by you. Okay, right. This is what you are supposed to do it. Next, one more same continuation to this. Suppose, my dear, in the P&L. Okay, yeah, say I am my percentage of completion revenue is equal to say 100 rupees has come. Okay, but actually total loss I am expecting 40 rupees total loss I am expecting. Okay, so far whatever the cost you have incurred, sir, I have incurred already 110 rupees of cost. Already how much incurred? Cost 110. Right, just this keep for a minute aside. Yeah, just observe the situation. I already have a gross loss of 10 rupees. Do you agree or not? Yes. So, but I will get maximum loss. How much from this contract? 40 I will get. That's why what should I do? You add another 30 rupees loss now. Means what am I supposed to do? Cost. Correct. Na? I mean loss due to contract, something like that. Loss due to contract account debit. Correct. To provision for loss. You have to make a provision for this. Because it is these contracts, onerous contracts and the one word is onerous contracts, ONEROUS. Yeah, these are all none of binding agreements. Generally construction contracts are binding agreements. You cannot jump just like that. Just because it's this loss, now I will jump, sir, I will not construct only. No, you can't say that. Okay, that's why you have to bear 40 rupees. That's why what do we say? Sorry, here not 40 rupees. Here I have to say how much? 30. So then I will say loss. This is cost, loss 30 rupees, then it will be 30, totally it will become 40 rupees loss is booked in the current. Okay, that's it my dear. We are through with accounting standard 7, construction contract. Hope you understood it. Okay, right. Yeah, now let us look at accounting standard 18, related party disclosures. Okay, see, first of all, disclosure. This is actually disclosure standard. Yeah, this is a disclosure standard. Okay, that means what? There is no recognition, correct? No journal entries, nothing. No recognition, no measurement. How much? Nothing required. Actually, nothing is required. Right. So, where do you disclose? We'll disclose in notes. Notes to accounts will disclose. What do you disclose? What do you disclose? We'll disclose the transactions with related parties. Transactions with related parties. Okay. Yeah, sir, are we supposed to disclose every transaction? Yes, yes, every transaction. Every transaction with related party. Yeah, every transaction you are supposed to disclose. Sir, my transaction is at arm's length. Oh, so what? Arm's length, leg length doesn't matter. Okay, any length, you are supposed to disclose it. Yeah, that, sir, I want to write a line like it is arm's length transaction. Write you line, that line also you can write it if you can prove it, basically. If you can prove the transaction is happening at arm's length, no problem. Please write that line also, no problem. Okay, but what do you mean by related party transaction? Related party transaction is a transaction when there is relation. I will say first. What did I say? It is a transaction. It is a transaction when relationship exists. It is a transaction which took place. Which took place when relationship exists. Yeah. Suppose say A and B are related parties. Okay, from which day to which day? So from 1/4 they are related, sir, till 30th/6 they are related, sir. In this period they are related. Okay. Now in this period, whatever the transactions are happened between A and B should be disclosed. Okay. After 30th/6 no relationship is there. But there is a transaction is there. But this transaction you don't need to disclose it. No need to disclose it in the notes to accounts. A transaction which occurred when there is a relationship. When the relationship is not there, let the transaction be there, but no, I am not going to disclose it. Yeah, this party, correct, on 31st March, relationship not necessary. When they were related, that time transaction took or not, yes, then disclose it. But on 31st March, they are not related, sir. You don't need to bother about it. Yeah, that means I will say, even though they are not related, on the balance sheet date. They are not related on the balance sheet date. No, correct. You don't need to be related on the balance sheet date. But when the transaction took place, that date, were they related or not? Yes. Then you are supposed to disclose it. That point you remember, please. Okay. Perfect. Next, what? Right. We are talking about this, but who is related party? Yes. This is what the question. Who is related party? Basic question. Yeah. The standard has given 5 points. Yeah, 5 points. Yeah, any point if you satisfy, if you are falling under any of these, then you are related party. Anyone. If you are falling under any of this relation, yes, you are related party. Okay. Here I'll say that's it. If you understand this, what is that? 5 points correctly, this standard is over. That's it. There is nothing else in this standard other than these 5 points. That's why you must focus lot on this related party. Got it? Done. First A, I will say B, C, D, E. There are 5 points. I will discuss each point separately. See, A, B and E. These are related. Who are the related parties? Related parties are entities. Yeah. First I will say A Limited is there, my dear. A Limited is the entity who is preparing financial statements. We are preparing financial statements. What do we call A Limited? We call A Limited as reporting entity. We are reporting, means we are preparing the financial reporting. We are doing the financial statement. That's why we call reporting entity. Okay, so now you have to think who is related, not related, is from the angle of A Limited. Got my point? Whether the other entity, correct? Who can be related to A, sir? Who can be related to A? This can be an individual. One human being also can be related to A Limited, or it can be an entity also can be related to my A Limited. Who will fall under this discussion? Who will fall under this discussion means A will fall, B will fall, correct na? E, entity only. About C and D, this is individuals. Yeah, individuals only will come under C and D points. Okay, if it is another party, is entity. Okay, so my company is A Limited, whether B Limited is related or not, then you have to check A, B, E. Okay, so there is one Mr. Y, whether he is related to my A Limited or not, then you have to check C and D. Hope you understood what I said. Okay, next, what do you mean by first point? Let us discuss. What is in the first point, sir? First point is very simple and straight. Right, it is an entity. An entity means not my entity. Okay, other entity who controls the reporting entity, who controls me, or who is controlled by yes, controlled by reporting entity, or who is under the common control. I will tell you who is under the common control of same reporting entity. Okay, right, means actually all these things, no, we can put a word called group. Group is including controlling, common controlling, controlled by, or controlling or controlled by, or under the common control. I will tell you. See, this is my reporting entity, A Limited, B Limited, whatever, some limited. Yeah, there is one company who is H Limited, holding company. It has got 80% stake. Iska baap, okay, ultimate holding company. Yeah, this has some 90% stake in it. Okay, fine. And let us say I have some stake in the subsidiary company. I have some, that subsidiary company has sub-subsidiary company. Reporting company has, okay, let us say not, that is subsidiary only. H company has got some Y Limited. Y Limited. Yeah, they have some 60% stake. UH company has, let us say, Z Limited. Yeah, they have some 80% stake. Yeah, now I am telling you who are all related to RE. Who are all related to RE? All are related to RE. How, sir? How means, my dear, first of all, I am first my point of view. Who is controlled? Correct na? Entity who controls reporting entity. Who is controlling? H controls, UH controls. That's why both are related. Who is controlled by reporting entity? S is controlled, SS is also controlled. That's why they are also related. Correct na? Next, under the common control. Common control means how I am being controlled by UH na? Even Z also is being controlled by UH. So we are all like brothers. Correct na? Yeah, even Y also is I am controlled by H, even Y also controlled by H. Got my point? Yes, that's why these two are coming under the common control. That's why this is the group. And I already told you, under group na, associate, joint ventures will not be part of the word group. Group includes only holding company, subsidiary company. Subsidiary includes sub-subsidiary company and common control. Okay, all right, under the entities which are coming under the common control, those are all only group entities. Got it? Done. So all the group entities are coming under part A. Fine. Right. So you know when it is subsidiary, when not subsidiary, and all that I don't need to explain. Correct na? The company who has got more than 50% stake, voting power, who controls the composition of board of directors, that you know, right? Yeah. And in addition to these two definitions, control means what? Generally, control means the accounting standard 18 has a separate definition. Not as per accounting standard, not as per Companies Act or any other rules and regulation. Accounting standard 18 says what is control. First one, what it says, yeah, more than 50%. More than 50% voting power if you have. Correct. More than 50% voting power means generally basic voting power. When do you get? Equity shares. Generally. Correct. Second one is what? Controlling the composition. Controlling the composition of board of directors. Composition of board of directors. Yes. Means without their permission you can't appoint or you can't remove the board members. Then yes, that is also, then also I can say I am controlling them. The third point also it says who has substantial interest. Who has substantial interest plus power to control the policies, this is one point, new point to you. This also is considered. What is substantial interest, my dear? 20% or above. Yeah, but listen, amma, if you have only 20%, na, then it is not controlled. We cannot say controlled. It is a rare circumstance, amma. You have with 20% or more than 20%, you should be having the power to control the policies. Rarely possible. Is possible. I don't say impossible, but is rarely possible. Even this is also covered as control when we can say as per accounting standard 18 definition. Okay, that's it. Next, B bit. Okay, what is there in the B bit, sir? Yeah, B bit, what you say? My dear, I'll say now first A company. Okay, there is reporting entity. A company has, let us say, 30% stake. Okay, there is another company called B. There is another company called C. Suppose this guy has got 40%, this guy has got again another 30%. From the A angle, okay, not we have. We are correct, na? Yeah, this guy is called investors. All these guys means A, B, C are called investors. From A point of view, this is an associate. What is it? This is an associate. Hope you understood, right? So associate, that's why what the second point, what does it says? Associate and investor. Yeah, bola? Associate and investor are related parties. Associate is related to investor, investor is related to associate at the same time. Okay, suppose my reporting entity, this is my reporting entity. Say reporting entity is a joint venture. Okay, reporting entity is a joint venture. Here also A, B, C are there, sir. That is 30% is there. Here 40% is there. Here 30% is there. Sir, it is same like earlier diagram only, na, sir. But why are you telling this is a joint venture? Yeah, my dear, in case of joint venture, all the three companies have to take the decision unanimously. Unanimously means without without all the people, suppose A, B agreed, even though A plus B is equal to 70%, but without C permission, you can't pass a resolution in the board or general meeting. Got my point? You need all the unanimous approval is required. But in this earlier position, may not like that. If AB or AC or BC, any combination may, if they join hands, sufficient, they can pass the resolution. But if it is a joint venture, all the parties in the joint agreement, everybody has to accept it. Right. Under this circumstance, when I call reporting entity is a joint venture, then I will call these guys as venturer. Venturer I will call. Now what the standard is telling, my dear? Venturer and venture. Venturer and venture. That means joint venture. Yeah. Venturer and venture both are related parties. That is also defined by the standard. But remember, E and B are not related parties. No, correct na? Co-venturers, correct na? Co-venturers, no, not related parties. At the same time, one more point else, I'll cross it. Right, first one is this is. Next, co-investors, no, co-investors are not related parties. Next, one more point. Listen carefully, listen, my dear. Yeah, suppose A has got, let us say, some 25% stake in another company called Y Limited, X Limited, something like that. Correct, na? Y and RE, no, are not related parties. What are these two? These two are co-associates related to same investor. That's why third bit, what I'll say, co-associates. No, co-associates are also not related party. Yeah, suppose this A has got in joint venture 2. There is a stake, 40% stake in joint venture 2. Two joint ventures, correct? Now fourth, co-ventures. Venturer, no, co-venture. Venturer is already covered here. Co-ventures are also not related parties. Remember, these four things, four combinations are not related. Straight, very simple and straight. Investor, associate. Venturer, venture. That's it, are related parties. Got it? Perfect. Next, C bit. Yeah, under C bit, as I told you, it is an individual who is going to be related party. Correct, na? It is an individual who is going to be related party. Yeah, when an individual will be related, I mean human being, correct, na? An individual, I'll say Mr. X. Yeah, how a Mr. X is related to my reporting entity? Yeah, what I say, Mr. X either he himself or with family, correct na, with relation, with relative. Yeah, if he himself is control, correct na. When you say Mr. X is related, when he has control over the control over related, what do you call, reporting entity, or individual has significant influence, he has a significant influence, significant influence over reporting entity. Means what? When do you say significant influence? 20% or above if you have the stake, then we'll say. Here 50%, 50 above 50% if you have stake. Mr. X, if he has 51% stake in the reporting entity, then Mr. X is a related party to our entity. Okay, right. But who is relative, sir? Yeah, relative means what we'll say. Yeah, for Mr. X, who are all called relative. Correct na? First father, then mother, these are all related to them. Okay, then whom, sir? Next brother and sister. Correct na? Brother and sisters of Mr. X only, not his wife. Then wife will join, spouse. Correct na? Yeah, if it is okay, Mr. X I told na, so wife is not a problem. And what about this? Correct na? Their son and daughter. Correct. That's it again. Yeah, listen here. Spouse mother, spouse father, no, not related parties here as per our definition. Okay. Sister. What did I say? Brother, sister, but not brother's wife, sister's husband. No, it is not. Next, only son, son's wife, daughter's husband. No, it is not related. Only whatever the names I have mentioned in this small diagram, only those are related parties. Yeah, suppose, yeah, me, suppose, yes, Mr. X and Mr. Spouse, example. Okay, na? This husband and wife. This guy has got 30%, this guy has got 20, the lady has got 21%. Totally how much they have got? 151% as a family, correct na? Yes, 51% they have, means both are related to the reporting entity. Got it? Yeah, so they have got 10%, they have got 15%, sir. Yes, they have got significant influence over, not individually, in together as a family, they have got related, they have got the significant influence over the reporting entity. Hence we say, yes, they are related parties to the entity. This is C bit. Okay, now let us look at D bit. Yeah, D bit is what? KMP and relatives of KMP are also related parties. Yeah, who is KMP means, you know, key managerial personnel. Key managerial personnel, not like something, you don't go by the designation. Okay, because they have given specifically definition. We go by the definition but not by the designation. Who is key managerial personnel? Yeah, key managerial person is that person, okay, that individual who has, standard says this, who has authority. Authority means power. Who has authority and responsibility. Yeah, I have the power to do it and I am accountability. Correct. Responsibility means what? Accountability for my actions. I have the power. Who has authority and responsibility for what? Responsibility for direction. Yes, direction. Responsibility for planning. First I will plan, later I will direct it, later I will control. Control what, sir? Control the activities of the company. Activities of the company. See, we'll go by the, I told you, we'll go by the designation but not by, we go by the designation but not by the we don't go by the designation, we'll go by the definition. Yeah, means what is the work doing? Is he controlling the activities of the company? Yes, then he is the one. Okay, that means what I mean to say, executive directors. What do we call? Executive directors. Executive persons basically are related parties, not necessarily, right? Who is the generally, sir? Generally means MD, correct na? A WTD, whole time director, what you call, correct na? CEO of the company. Yes, he has control over the activities of the company, like that to those persons. CEO is not a director, but doesn't matter because he satisfies the definition of authority and responsibility. So CEO is going to be, what is that? Is a related party to our reporting entity. Hope you have understood this point. Okay, next E point, let me explain to you. E point, I told you, it is again entity. Yeah, this is my reporting entity. Okay, yeah, there is some X limited is there here. Actually, E reporting entity does not have any stake in X limited. X limited does not have stake in reporting entity, no relation actually, but they are getting related, because of one Mr. X. One Mr. X means this guy is an individual. They are not directly related parties. Okay, they are not directly related parties, but they became related parties because of one human being. Okay, yeah, it can be Mr. X or Mr. relative of Mr. X. Anything is fine. How, sir? How means listen carefully. Yeah, one Mr. X must be having significant influence over reporting entity, or okay, and correct, it should be one side he should be having significant influence, right? Other way around, what should be, he should be linked to the company C or D situation. Yeah, what is C situation? Under C situation, what do I say? Significant influence or control, correct na? D situation may what? KMP. Then it is correct. Here I said significant influence is lower level, correct na? So since significant influence is lower level, I can say even control also I can put. So can we exchange this side? Yeah, you can exchange. You can put to this side here, and these two information can come each side. Exchange is allowed. One-sided, he has got, he's correct na? To one company he is related under C or D point, and to other company he is related under what? Under significant influence or control. But remember here, suppose listen carefully here. Yeah, suppose this guy is a KMP here. Suppose he is a KMP here, right? Is it whether these companies RE and X limited will become related? No. Why, sir? Means KMP, no, we did not tell. We told one side what? E side KMP is there, so it satisfied one side, correct? But E side KMP though? No, it says significant influence or control should be there. But my point, one side significant influence or control, other side significant influence or control or KMP, anything is okay for that side. Hope you have understood. Okay, so under the E point, what are we trying to say? The entities are actually not related on their own. There is no direct or indirect relationship. Means it is other company is not a subsidiary or associate or joint venture. No way relation is there, but they are becoming related parties via another human being. This human being must be one side either control or significant influence, other side he can be having significant influence or control, or what did I say, and KMP he should be. Yeah, if it is only KMP aside also, no, you cannot be treating them. Got my point? Right. And again here I said executive director, I told, correct, executive director I told, but is a part-time directors, sir? Part-time directors are non-executive directors. They will just come to the board of directors meeting and they will take part in the discussion and they will go, right? They are not sitting there and they are not controlling, directing, planning and all. They are not doing actually. So we cannot pull these guys into my definition of related party. Okay, right? And the standard specifically says who are not related parties also. Who are not related parties? Yeah, who are not related parties? Sir, who are not related parties, sir? One. Yeah. One, what do we say? The lenders, basically. The lenders. Correct, na? Lenders. Government organizations, government entities, public utilities, right? They will be having, see, because of the lender I may be dependent. Yeah, financially I may be dependent, but just dependency is not a relation. Na? Tomorrow once I get the money I will pay you and I'll say get lost. Relation is different, dependency is different. Correct. Now, financial dependency is not equal to relationship. That's why we cannot consider. Okay, right. And the second thing, okay, there may be one single customer. Yeah, there may be one single customer. There may be single supplier. Yeah, single supplier or single franchisee or franchisor. A single lessee or lessor. Correct, na? Right, lessee or lessor. No, these things are not going to be considered as related parties. Got my point? And as I told you, common directors, just now I told you common directors, KMP. No, if you have common directors, no, I'm not going to take them. These are all not going to be related parties, specifically said by the standard. Specifically said by the standard. That's it, my dear. This is our accounting standard 18 related parties. What is that? Discussion. Okay. Yeah, let us discuss now accounting standard 26 revision. Is accounting standard 26, intangible assets. Yeah, intangible assets. This is not that, from examination point of view, it is not that difficult actually, but it's okay. Anyhow, I'll cover almost every point here. Right. What is first intangible asset? First, in the scope, if you look at if they look at the scope, it says if it is intangible already dealt by other standards, then will not be dealt by my standard. Okay, what is that? Which is already dealt by. Yeah, it is dealt by other standard, other AS, not dealt by. Yeah, not dealt by accounting standard 26. Is there any such kind of thing? Yes, there is, correct. Yeah, accounting standard 14, if the goodwill on amalgamation, correct, goodwill on account of amalgamation, you have to go to accounting standard 14, not dealt by accounting standard 26. Yeah, in accounting standard 21, that is consolidation goodwill. Yeah, if you are doing consolidation which is arising due to, correct, goodwill is arising, it is not dealt by that standard. Yeah, even deferred tax is also like considered as like intangible asset only, deferred tax asset. But that is also not dealt because there is a specific standard. If there is an intangible which is not dealt by any other standard, then you please come to accounting standard 26. That is the first scope, small point. Other points are there, that is not that important. Okay, what do you mean by intangible asset definition? What do you mean by the intangible asset? What do you mean by intangible asset? I will record now onwards. What is an intangible asset? Intangible asset is, what do you say? It is a non-monetary asset. It is an identifiable, let me write first. Identifiable non-monetary, identifiable non-monetary asset. Yeah, without physical substance. Without physical substance. Yeah, in this definition, basically what do I say? This is topic number 1, this is topic number 2, this is topic number 3, this is topic number 4. Okay, yeah, this is topic number 4. It's like that. Okay, we'll be discussing each topic obviously in depth. Yes. When do you say it is identifiable? What do you mean by identifiability, my dear friend? Yeah, identifiability means, I can say simply separable. Separable means what, sir? Separately we will be able to sell it, separately we will be able to use it, separately we will be able to rent it. Can I do it? Correct. Without goodwill. Correct. Right. Suppose I have got the copyrights. Yeah, correct. My company holds some copyrights. Correct. Can I sell only copyrights to other person? Yeah. Without selling business, I don't need to sell my entire company. I can sell. Suppose if you want to sell goodwill, goodwill is not like identifiable. Why, sir, goodwill is not? Because you cannot sell goodwill alone. You have to sell company together. Correct. My entire company, I want Tata company goodwill. How do I purchase it? Can I go to some KR market here nearby? No. Correct. Tata company product you can purchase, but not Tata company goodwill. Like that. So goodwill is not identifiable. Right. But anyhow, goodwill, self-generated goodwill only is discussed here. That's saying that don't recognize it. That's nothing else. No other goodwill is discussed by accounting standard 26. If you have bought a company, that is discussed by accounting standard 14, not by this standard. Got it? Done. So that's why what do we say? Which can be separable, that is identified. Separability is the only matter, sir. It is not always separability if there is any other logical way, any other manner. Any other manner also you can say it is separable. Then also it is fine. You have to ensure it is a separable, identifiable asset. Okay, done. Now, under some circumstance, what happens? Suppose you are purchasing one processor. What are you purchasing? You are purchasing a processor. In this processor, what will be there? There will be hardware as well as there will be software. Okay. So now, sir, yes, now I say I can't separate this. This software cannot be separately sold. It is part and parcel. If you purchase what do you say, processor, software also will come within. Means how to work that. Processor has to work means there should be something behind. Na? Only just hardware will not work. Perfect. So, sir, now what are you supposed to do when something tangible and something intangible are clubbed together? Okay, what did I say? When there is a tangible, intangible, both are mixed, then what are we supposed to do, sir? Then you have to decide. You have to decide as one. There is no bifurcation. There is no bifurcation. Remember, first, there is no bifurcation here, and there is no component accounting here. Okay, right. E standard में component accounting का बात नहीं है. No, that is only related to accounting standard 10. Got it. What are you supposed to do? You have to tell me which is predominant. Which is predominant? What is important to the processor? Is it hardware is important or software is important? Yeah. See, actually, what is important? Hardware is important. Practically speaking, if it is hardware is important, then entire processor will be treated as per. It is like a PPE as per accounting standard 10. Okay, that's what if I say hardware is important, then you have to account it as per accounting standard 10 but not as per accounting standard 26. If you say software is predominant, sir, actually not, but some other item if you take it, software is important rather than the hardware. Okay, then we will take this entirely, it will be dealt by accounting standard 10 but not by, accounting standard by 26 but not by accounting standard 10. That is very important. Next. What is non-monetary? My dear, I don't explain it here because it is already discussed under accounting standard 11. You can look at that accounting standard 11 discussion in group 1. Yeah, what is asset? Asset is something which is controlled by the entity. That is important. Which is controlled by the entity. If it is controlled, correct na? See, if I say this is mobile, yes, it is under my control because it is physical item. Correct. Now, what can I do? If somebody, I'm expecting that somebody will take it, I'll put it in locker and I'll just lock it first of all. Correct. Na? So some physical things, so I can say this, I can control it, but it is intangible, na? Then how do I ensure it? Suppose say I have copyrights. Yes, I have copyrights. How can I control it? Copyrights. So what do I say? I register copyrights. Copyrights are in my name. Fine. If somebody copies it, xerox it or something like that, they'll do. I can file a case. Seriously speaking, yes, I can file a case. That is criminal case. It is not okay. Civil case. It is very. I mean, what is that? Intellectual property. That is very serious case actually. But people don't know, right? People. I always tell these guys. In India, copyright means they feel right to copy. Right? They don't respect even that. Is the worst part, but they're all educated fellows. That is one more worst part. They don't even respect the other person's effort. That is seriously an offense. Correct. Knowingly you are doing. If you're not interested, you're not supposed to. Don't purchase the book. Correct. Just for comparing, like 10 rupees difference I'll get, 100 rupees savings I'll get. But you are not respecting other person's efforts. Na? So many hours and so many days and sometimes years also it took for me to write a book. Same thing will happen for other authors also. Correct? That's why I already told in another video also. If you don't know how to respect our efforts, then how do you expect God will respect your effort? Basic question. Got it? One has to understand. Correct? Now, if some student says, no, my God, go to God and say, all my efforts only should be respected. Other effects, I don't respect me. Do you think he's a fool? Huh? And you are a chartered accountant student, isn't it? Obviously, when you give respect, respect will come back. When you can't respect, don't expect to. Yeah, these words may be bitter little, but fact is always bitter, my dear friend. Okay. Right, and people, they don't even, they don't have the, when it is possible, share it. Now, if it is a good information, please share it. Some wrong information, rumors will share it like anything. Without checking whether it is correct or not. If it is useful to your friend, some students, they don't even share. We can't understand their mind actually. Fine, anyhow. But understand control. How do you ensure, sir? Yeah, by correct. Now, how do you control? Yes, I will be registering, sir. Registration you can do. I can say I have control of copyrights, patents. Correct. Now, website name registration will do it. It is in your name. Correct. So, can you ensure that do you have a control over it? And when do you say asset? Asset, when do you say there should be probable future economic benefits? Probable future economic benefits. Correct. Now, probable future economic benefits inflows from that. Yeah, plus it should be measured reliably. It should be measured reliably. Then only you can say yes, it is an asset. Then only you say it is an asset. And what about physical? Correct. Now, without physical substance, as you know, this is an intangible. Correct. Now, this is what is this, my dear? It is an intangible asset. I will explain here. You can't expect that there will be some physical, something physical asset. Got it? Right. So now the basic point, what I would like to say, right? Yeah, say something art. I'll say art. Okay, somebody has, some art by some great person. Okay. Yeah, but what is there in that? Is it tangible or intangible? That canvas anybody can touch, anybody can carry it. Correct. But the point is, it is art. You're paying not for the canvas and not for the colors, not for the paints, but you're paying for the art in it. That art is something intangible. That's why many people, accountants, to say, by saying, okay, physically I can see this, I can touch this, that's why it is a PPE. They're going to account it as a PPE. Wrong, actually. People have to look at the definition very carefully. Getting my point? Right. That is very important. Fine. Something like this. Next. What about recognition and measurement, sir? Yeah, recognition and measurement. Yeah, as usual, recognition, though I say initial recognition is something, initial recognition, and then subsequent measurement. Yeah. What is the subsequent measurement you mean? A subsequent measurement means on the balance sheet date. Yes, on the balance sheet date, what do you follow? We will follow only cost model, my dear. Yeah, there is no concept of revaluation model, revaluation of intangible asset. It is prohibited. No, you are not supposed to do it. You cannot do it. It is prohibited in India. And revaluation of intangible asset is prohibited as per accounting standard 26. IND AS, as per IND AS, IND AS 38, that is, yeah, it is allowed. But as per AS 26, no, it is prohibited. Remember that. Yeah, cost model, so you know that. Anyhow, I'll come to that point. Initially means, what do you say initially means? Yeah, initially means at the time of acquisition. At the time of acquisition. Yeah, when you purchase it at that time, how do you recognize it? Okay, right. How do you this actually basically, we have like 4 or 5 situations are there. Yeah, what are the 4 or 5 situations, sir? First situation, I'll say you are buying by paying cash or credit. You paid the money and you got the intangible asset. Yeah. Next one is barter system. Okay, barter system. Yes, you know that, exchange of assets. Next to what I say, it is as part of amalgamation. As part of amalgamation. Yes, as part of amalgamation, you have bought it. Got it. Next, the last one, what I say, this is a self generation. You only, we have done research and development and we generated one new intangible. We have invented something. Correct. That is self generation. One has to understand this. Okay, sir, what about the cash or credit? It is very simple, straight actually. Correct, no? Whatever the basic price you have paid, yes, basic price you have paid, plus registration charges. Yeah, registration charges. Yeah, registration charges. Yeah, registration charges plus any non-refundable taxes. Non-refundable taxes. Yeah, non-refundable taxes. Yeah, custom duty is something like that if you are supposed to pay and you don't get back. Suppose if it's GST input tax, if input credit, if you can take, then obviously it is not, because it is getting refunded. Correct. any kind of things. Okay, yeah, maybe what do you call registration charges and maybe some professional charges, yeah, for registration purpose or any other purpose. Professional charges you have paid, yes, plus all directly attributable cost, all directly attributable cost. Yeah, you are supposed to consider it. Yeah, minus if there is any discount, rebate, anything like that. Anything you are supposed to, yes, obviously we are going to cut it. This is what cost of intangible asset. Cost of intangible asset. Perfect. And with respect to barter, this barter is not like accounting standard, 10. Okay, in case of accounting standard 10, if you have seen that, we said that there is a commercial substance or something like that. No, there is no word of commercial substance. It is straight answer. What do you say? Yeah, recognize the intangible. Correct, na? Recognize intangible asset. Yeah, at what? Recognize the intangible asset fair market value of asset given. Yeah, fair market value of asset given or fair market value of asset taken. Fair market value of intangible asset received, otherwise received, whichever is clearly evident. Whichever is clearly evident. Okay, whichever is clearly evident. Yeah, this is actually explained. I mean, how to use this is already explained. This is the first priority you are supposed to give. If you can't measure the asset given, why sir means what is, yeah, initial recognition, I did not tell you. Initial recognition, you have to record it at cost. You have to record at what? Cost. Yeah, what is cost? Cost means what you lost, I told you. Okay, right. So what I lost, I gave my asset. So that is the fair market value of that asset is supposed to be considered. Yeah, in this case, what can happen? There is a possibility of profit or loss. There is a possibility of profit or loss. That profit or loss should be transferred to P&L. Yeah, suppose yes, this is your balance sheet. You have some X asset, which is the book value is equal to the carrying amount or book value, whatever people say, correct, 100 rupees. Fine, but the fair market value of this asset is equal to say 120 rupees. Correct. Now you got an intangible asset. So intangible asset account debit at fair market value of what you got. Assume this only can be measured reliably. Okay, this can be clearly evident than the other thing. Then 2x. X has gone, that is why. But isn't it a profit or not? This profit only should be transferred to P&L. Got it? Suppose sir, I paid 20 rupees extra, also I paid cash. No problem. To cash you paid 20. And then what are you supposed to do? That means you lost 120 rupees of fair value plus 20 rupees of cash. That's why total intangible asset should be recognized at 140. Got it? Sir, I got 20. Fine, then you got 20 means cash account debit, then you say 120 minus. Got it? Yeah, something it is depends. You are supposed to adjust for the cash amount paid or received. Okay, right. Now let us discuss this. If you have received intangible asset as part of amalgamation, okay, it is big discussion, little bit. Okay, yeah, we received it as part of amalgamation. Yeah, sir, under this circumstance, how are we supposed to deal this? Yeah, simple. When I say amalgamation, what is amalgamation? Amalgamation in the nature of, amalgamation in the nature of merger or amalgamation in the nature of purchase? First question you should ask. Yeah, amalgamation in the nature of merger, sir. Okay, if it is a merger, you know the first condition itself, all assets and liabilities should be taken at carrying amount. Correct, na? So record at carrying amount. CA means carrying amount. But there is no carrying amount, then don't record it. That's it. If the intangible asset is existing in the books of purchasing company, then selling company, it will come to purchasing company books. Otherwise, suppose say this is the selling company books. There is intangible asset 1. There is an intangible asset 2. What is the book value? There is a book value of 100. There is a book value of 0. Why there is a book value of 0? This is a self-generated bond. What do you say? Self-generated. Since it is self-generated, we have not recognized it. Fine, not a problem. Now the question is what? Basic question is what? Now what is the purchasing company? If it is a merger, I don't have an option. I have to record intangible asset 1 at 100. That's it. Intangible asset 2 will not be recognized. All assets and liabilities should be recorded at book value, carrying amount, correct? No? That's why. Yeah, sir, if it is a purchase, first we'll ask a question. Yeah, purchaser has an option. Yeah, he can record it at book value or he can record it at fair value. Both are options are there. Which option selected? First we'll ask a question. Which option selected? Which option selected? For this answer can be what? Sir, we have recorded at book value, sir. Or we want to record it at fair value. That is a choice which is given to the buyer. If you say book value, na, same thing. Book value means same situation. Same situation means whatever the book value in the books of selling company, na, same book value only supposed to be taken. Okay, next question. Yeah, now, sir, we wanted to go by fair value. Next, what do we say? Whether there is an active market, whether active market exists. Next question we are asking here. Whether active market exists for intangible asset. Question mark. Yeah, if you say, sir, yes, sir, there is an active market. Yes, there is an active market means what? People are buying, selling such kind of intangible assets in the open market. That is called, we'll say, active market is there. Sir, there is an active market. Then we say record it at fair value. Record at fair value, fair market value, without any restriction. Without any restriction. Why are you saying restriction? Means when I say no, na, there are some restrictions. That's why I'm saying without any restriction. Yeah, you don't need to. There is no restriction on the fair value. In the sense, in case of purchasing company, there is an intangible asset 1. There is an intangible asset number 2. Okay, sir, what is the fair value? Let us say fair market value of this intangible is equal to 150. This intangible is equal to 80. Record intangible asset 150. This is equal to 80. Even though this intangible asset 2, even though, remember my dear friend, even though it was not existing in the selling company books. This is important point to remember. Even though it doesn't exist in the selling company books, still you are supposed to record it at fair market value. You are supposed to record it at fair market value. Are you getting my point? Yes. Next, sir, if you say no means what? There is no active market. The active market is not there does not mean no market. No active market is not equal to no market. What is this? Active market means frequently buying, selling is taking place. Sir, but active market does not, there is no active market means what? People are not buying frequently. They may be buying 6 months once or like 1 year once, something like that. Market is there, but market is not active. Got my point? Yeah, so there is no active market for our intangible asset. Then what the standard says? Yeah, you record it at fair market value. You recorded fair market value where maximum, correct, there is a maximum limit where maximum your goodwill amount can be 0. That's it. That means because of this now we cannot create capital reserve. This you remember. We cannot create capital reserve if there is no active market. Okay, right. I'll give you an example so that you will get better clarity. See, purchasing company. Okay, purchasing company, what do? We calculate goodwill or capital reserve, as you know. Correct. What do you record just first? Purchase consideration for calculation. Correct. Now, first purchase consideration, some X number I'll keep. Let me say some 1000 rupees. Okay. Then what do you do? Net assets. Okay. Net assets taken over. Yeah. Net assets taken over at fair market value. This is other than which one? Other than intangible assets which does not exist. Okay, which does not exist in selling company balance sheet. Let us say that has come to 960. Fine. Now what is this number? 40. Yeah, again, first one more point I have to tell you here. This is with respect to what? Intangible asset that does not exist. in the selling company books. Yeah, try to catch this point. I'll explain once again with the numbers. See, I mean to say, this net assets of 960 includes intangible asset 1, but E960 does not include intangible asset number 2. Got it? Yeah, E960 includes already how much is that? E960 includes my fair market value of intangible asset is this one I told you, na? 150. 150 to high. 960 includes 150, but 960 does not include 80. Okay, what should I do now? Now listen. Generally, what do you record? Goodwill is equal to, I'll just make a small change. Okay, I'll say 1000. This I'll make it 50. Got it? I'm just increasing the consideration so that 50 will be goodwill. Now, can I record that intangible asset number? Okay, right. First question: Can we record in the purchasing company balance sheet that intangible asset number 2? That's the first question. Can we record? Yes, we can record it. But for what value, sir? What value means you can record a maximum of 50. Okay, what is that? Yeah, what do we say? Record at maximum of 50. Yeah, but sir, actually fair market value is equal to 80, na? Correct, fair market value is 80, but I cannot record it more than 50. Yeah, the minute you say I 50, I will record it, correct, na? Then what is the goodwill amount? Goodwill will become 0. How is it? I will pass a journal entry also. Look at this. Yeah, for this transaction, what are you supposed to record? Net assets account debit. How much? 960. This includes intangible asset number 1. Okay, intangible asset number 2 debit, that is equal to 50. To purchase consideration, a business purchase, the 1010 rupees. Like this you will be recorded. Here, do you have any goodwill? No. In the place of goodwill only it has come. Say example. Next, one more small situation I am giving you. Suppose say intangible asset to fair market value is equal to 30 rupees only, sir. Correct. See, it has to be at 30 rupees only, not like maximum. I said it is not, maximum is 50. Under this circumstance, how do you record? Net assets, this is including intangible asset 1, that is equal to 960. Done. Next, what? Intangible asset number 2 account debit 30. Then goodwill account debit, this is equal to 20. This is balancing figure. Now this is business purchase, what you record generally, correct, na? Business purchase is equal to 1010. Like this, one has to record the journal entry with respect to intangible asset acquired as part of amalgamation. Got it? Done. Next point is self-generation. Yeah, let me explain that. Self-generation. Here also generally students are not understanding some parts. Okay, let me explain. Self-generation means there is a process. It is divided into 2 phases for the purpose of standard. 2 phases. First phase, 1 phase is called research phase. Yeah, research phase. Yeah, next one is called development phase. Development phase. Okay, sir. One is research phase, next one is development phase. Excellent. Now, what are we supposed to do? Research phase, development phase. What is research, sir? Research means like not Google search, obviously. Okay, research means what? Research is original, sir. Original. I mean, it is like invention. You are trying to find out, you are trying to get the knowledge which is not known to the people, not known to the world first, basically. Yeah, this is the original search. Yeah, this is the original search for new knowledge. Original search for what? New knowledge. New knowledge, that is important. It is the original search for new knowledge. Remember. Yeah, new knowledge means which knowledge, sir? It can be technical knowledge, it can be scientific knowledge which is not known to the world. Got it? Yeah, that is an invention. Yeah, see, when can I recognize any intangible asset? First, it should be asset. When do you say it's an asset? There should be probable future economic benefits inflows and it should be measured reliably. Cost or value can be measured reliably. First, research is what? Something you are trying to find out, which is not known to the world. When you say it is not known to the world, how can you say that it is possible? We don't know whether does it exist or does not exist. No one knows. There may not be such item. We are trying for it. Correct. Now we are trying for it. You try, no problem. Maybe there, may not be there. Who knows, sir? God only knows. Then how do I say? When you don't know, existence is doubtful. Correct, na? Existence is doubtful. Existence only depends on the God's decision. Then how can you say probable economic benefits? It may be possible, but it is possible but not probable. Got it? That's why research expenses, research expenditure, what are we supposed to do? You are supposed to charge to P&L. Yeah, till the end of research phase. Let us say, sir, on 30th/6/2020, research completed, sir. Research is completed, sir. From 1/4 to 30th/6. Correct, na? From 1/4 to 30th/6. This whatever you have spent, that also supposed to be charged. Because till this date, na, you don't know whether it will happen or not. Yes, you got to know subsequently, but doesn't matter. Standard is clear? Research, if it is research expenditure, close it. That's it. Charge to P&L because we cannot ensure probable. We cannot ensure what you cannot ensure, my dear. We cannot ensure probable future economic benefits inflow. That is what I am trying to tell you. We cannot ensure probable future economic benefits inflow. That's why you are supposed to do it. Got it? Perfect. So what about development phase? What about development phase? See, development phase is what? It is nothing but application. Yeah, it is an application of knowledge. Yeah, this knowledge, e-knowledge, you must have got the knowledge from the research phase, or you must have got it from outside also. Everybody need not do research. Okay. Only the person who did the research only should do development, nothing like that. Somebody will do the research, somebody will do the development. Okay. But it is an application of knowledge till what date, sir? Till commercial production starts. Till commercial production starts. Till commercial production starts. Till the date of commercial production starts, it is called development phase. Sir, can I recognize asset? Can we recognize? Yes, we can recognize asset. We can recognize asset. That is what, intangible asset under development. Have you seen in the balance sheet format? Yes. Intangible asset under development. Sir, can we recognize? Yes. But you have to demonstrate. Management has to demonstrate. What they have to demonstrate? They have to demonstrate 6 conditions to it. Yeah, they are keeping 6 conditions. If you demonstrate all the 6 conditions are satisfied, then you take it to balance sheet asset. Sir, I can't demonstrate. Charge to P&L. That's it. Got it? Right. Demonstrate. When should I demonstrate, sir? On every balance sheet date. On every balance sheet date. Okay. Till commercial production starts. Till commercial production starts. Okay. Till commercial production starts. On every balance sheet date, you are supposed to demonstrate. Okay. Suppose any year. Okay. Any year. We could not demonstrate. In any year in the middle. Okay. In any year, we could not demonstrate it. Then what are you supposed to do? Nothing to do. Charge the entire cost. Charge the entire amount so far incurred. Okay. So far incurred. So far incurred means it's not in the current year. Current year, last year, all is from the date of starting of development to till date. Charge the entire amount so far incurred to P&L. That's it. Next, one more important point, here. Yeah, once charged to P&L. Yeah, once charged to P&L. Right, cannot be reversed. Cannot be reversed. Cannot be reversed in the sense, yeah, maybe you are able to, correct, now maybe you are, suppose example, I'll say this. Okay, year 1, year 2, year 3. Okay. First year you spent 4 crore. Next 3 crore rupees you spent. Okay, here 2 crore rupees you spent. Yeah, you are able to demonstrate. Then capitalized 4. You are able to demonstrate capitalized 4 plus 3 balance sheet date 7 intangible asset under development is there. You spent 2 crore but you are not able to demonstrate. Then what are you supposed to do? Till date you incurred. Till date from which day? From this date. Means 4 plus 3 plus 2. full 9 crore rupees should be charged to P&L. That's it. It should be charged to P&L as an expenditure. Yeah. But suppose, sir, I am able to demonstrate in the next year, sir. 6 conditions are satisfied, sir. When you say demonstrate, suppose 1 crore is spent, only this 1 crore will be intangible asset under development, my dear. But not that whatever you charge, sir, I'll reverse it. No, not allowed. It is prohibited. Only this rule is applicable only with respect to intangible asset, not for other situations. It is only with respect to intangible asset. Once it is charged, expenditure is charged to P&L, it cannot be taken back. Yeah, remember this point. It's very important. Okay, right. This is the first basic issue. Hope you understood what I said. Okay, perfect. Now the next, what are the 6 conditions? 6 conditions are nothing like, do you have technical feasibility? Okay, will you be able to get the future economic benefits? How can you get it? Do you have enough human resource support? Do you have financial support? Can you measure the costs and etc.? These things. This is nothing but probable future economic benefits inflow. Can you confirm? Yeah, management has to prove it. See, I'm going to doing the development of this, I'll make it like this and I'll make money. You have to prove how do you get the money. That's it. But even those 6 points also were asked in the examination once for 6 marks exactly. Okay, so do not underestimate. All you are supposed to revise it once again. Got it? Yes. Next small topic, what they say, the following, okay, the following expenses, the following should be charged to P&L. Yeah, following should be charged to P&L. What are all those, sir? First one is preliminary expenses. Yeah, preliminary expenses. Yes, preliminary expenses does not satisfy an asset. Should be charged to P&L. To training expenses, training cost. Unless you prove that I have a control over employees, there is a bond, they cannot leave us, then that is general training. I am saying general training expenditure generally charged to P&L. Okay, any advertisement cost. Yeah, any advertisement cost. See, advertisement, I told you, advertisement will create what? Advertisement will create awareness. What did I say? Advertisement will create what? Awareness, but it won't create there is no probability that customer will come. Got it? Yeah. So I'll say, see, I am listening to number of soaps. Correct? Na? That soap, this herbal soap, that soap. I see in advertisements, so many soaps are there. I know that there is one soap, but am I purchasing daily all those soaps? I am not. A number of soaps are there. I have not even tried. I am okay with what I am using right now. Correct? Na? But I know that there is one soap is available with this name. But just because I know it, but I will not become a customer. Yeah, but since you are advertising in TV, newspaper, and etc. in different modes, people are getting aware that there is some product. If there is any necessity, then I may try. It is may, not probable. At my point, it is always, it creates awareness, but not customer guarantee. Sale takes place because of the quality of the product, my dear. Correct? Post to sale service, guarantee, that's etc. things. Correct? And our feedback from the customers is more important, not your advertisement. Correct? Even though you are correct, now superstar only is coming in the advertisement. Yes, he is superstar, but for my house and for my money, I am only superstar. Correct? So if my friend says, hey, this is very good product, I applied. That's it. Even superstar told, I did not listen. My friend told he is no star. Okay, but still I will listen to it. Got my point? That is a different. But advertisement may be one of the element for the sales, but advertisement is not the only element. So from advertisement, nobody can say, yes, sales will come. No. You can fool us one time, Guru, not lifelong. Nobody can fool us. Correct? Nobody can fool us lifelong. Hope you have understood. Okay, next fourth point. Yeah, what is fourth point? Opening ceremony expenses. Opening ceremony. Correct? Opening ceremony. You are opening some product. Correct? Or product launch. Okay, product launch expenses. All these things. No, you are supposed to charge it to P&L. Sir, it is huge money, sir. Doesn't matter, sir. It has to go to P&L, means it has to go to P&L. Got it? Right. This is a small topic. That portion is over. Yeah. Next important part in this standard, amortization of intangible asset. This is another important point. Okay. Another important amortization mein what is there, sir? In this, basically, what is the method of amortization is one, and what is the useful life is next one discussion. Residual value and all not important discussion. Okay, what is important we will discuss. Yeah, what standard says, sir? Standard says you amortize the intangible cost. Yeah, cost in which ratio? In the ratio of future economic benefits consumption. How are you deriving using the asset? Yeah, apply the ratio of consumption of future economic benefits. Yeah, consumption of future economic consumption, it is not in the sales ratio. Strictly speaking, sales ratio is not permitted. But in the question, if they say sales ratio, you follow that because you don't have other choice. That's why you have to follow it. Consumption ratio. Okay, but why not sales ratio, sir? My dear, sales value will be fluctuating based on the market competitors and etc. Not based on the intangible asset. Yeah, I'll tell you example. Okay, yeah, say example, intangible asset is there. Suppose this is going to be life of 4 years. By using this intangible, first year I produced 1,000 units, next year also I produced 1,000, next year also produced 1,000, next year also produced 1,000. My production is same. But what is the selling price of here? First year it was 12 rupees, next year it went to 13, next year it went to 8, next year it went to 15. If you ask me sales, these numbers are fluctuating or not? Correct. But I have to generated the assets, products in the same ratio, that's why what am I saying? You should take this, that is SLM. You have used the asset in equally every year. You use the asset equally every year. So SLM method you are supposed to do it. E selling price has market factor. Correct. Now competition. So many situations are there in the market. So I cannot say, correct. Now I cannot say selling price is selling price based. No, you are not supposed. You should do it based on what? Consumption. Okay, sir, I am not able to decide the consumption. Example, consumption ratio, right? Sir, not able to determine. I don't know how are we not able to determine. Oh, is it? Then you don't determine means then you what the standard says, follow SL. Yeah, assuming that what? Assuming okay, I'm consuming every year equally. That's it. When I don't know specifically the consumption ratio, then you should follow SLM method. That is what said by the standard. Okay, next, useful life. Yeah, useful life mein what the standard says, accounting standards has a rebuttable assumption. Kya bola? Rebuttable assumption. What is rebuttable assumption, my dear friend? Rebuttable assumption means standard is arguable assumption. Standard is saying, what is standard is saying? Maximum life of intangible asset is equal to 10 years. That is what standard is saying. You can argue it. Just because we are arguing, it is not that you should take 10. Okay, yeah, if you prove it. Sir, if I prove it, I prove that life is equal to 25 years. 25 years, I prove it. I have a documentary evidence. I have experience. Fine. Then amortize in 25 years. Sir, I cannot prove, sir. I am not able to prove, sir. Actually, life is more than 10, sir, but I cannot prove it, sir. You can't prove it means life is equal to 10 years, maximum 10 years. You can't go beyond that. Are you getting my point? Life, if you can't prove it, life of intangible is maximum 10 years. It's not beyond. You cannot prove, keep quiet, that's it. Hope you understood what I said. It is like that. If you can prove it, well and good. I agree, take it. How many years you can prove, that many years you can say. If you can't prove, keep quiet. Got it? Right. Next, that's it, my dear. These are all the important points. Important revision of accounting standard 26. Okay. Yeah, guys. Now let us look at Accounting Standard 20 revision. Okay, earnings per share. Yeah, here earnings per share is also obviously a disclosure standard. Yeah, disclosure standard, there is no recognition. We don't record a journal entry for this. Correct, no? But do you measure? Yes, we have to measure. Measurement is there. Yeah, measurements are. Yeah, if you want to write some 10 rupee 25 paisa, means how do you say 10 rupee 25 paisa? That is measurement. Okay, right. It is a disclosure standard. Where do you disclose, sir? Yes, on the face of P&L will disclose. And calculation part. Yeah, and the calculation part will be disclosing. Calculation part we will be disclosing in where? Calculation part we will be disclosing it in notes to accounts. Okay. Yeah, it's like that. Fine. See, this earnings per share, you know, there are two types of earnings per shares. Right. Are you supposed to disclose both? Yes, you have to disclose both. Yeah, one is basic earnings per share, basic EPS. The next one is diluted EPS, dilutive. Okay, dilutive EPS or diluted EPS, doesn't matter. Yeah, so both you are supposed to learn. When I say, sir, my company has got losses. Yeah, what you have got losses? Yes, losses. Then what will happen? Minus EPS will be there. See, this is not profit per share. This is earnings per share. Earnings means neutral number. Neutral means it can be positive, it can be negative. Positive earnings are called profits, negative earnings are called losses. Okay, but losses are there means your EPS is going to be presented in negative, but you have to present it. Got it? Right. So let us first focus on the first small topic, that is basic EPS. Yeah, basic EPS is not small, but it will take a considerable amount of time. Okay, right. Sir. Basic EPS mein what is the formula? Very simple formula. Net profit or loss. Okay, net profit or loss attributable to, okay, attributable, net profit or loss attributable to equity shareholders divided by weighted average number of, okay, weighted average number of equity shares outstanding during the period. This is important. Yeah, outstanding during the period. Yeah, outstanding during the period. Remember, this is outstanding, we are saying during the period. Yeah, we are not using the word outstanding at year end. No, that is like balance sheet date mein how many outstanding. No, I never said. It is outstanding during the period. It was there for some period, but it is not there on the 31st March. Maybe you bought back. Correct, but still it will be considered. Weighted average. Weighted average, how do you calculate? Obviously, it is calculated based on time. Yes, time factor. How long this many shares were there? We are supposed to apply it. Anyhow, we'll come to that. First, let us talk about the numerator part. What is numerator part? Net profit or loss. Correct? Net profit or loss for the period. For the period attributable to equity shareholders. Yeah, this you should deduct the following. Yeah, in calculating of net profit, you deduct the following. Sir, what all I am supposed to deduct, sir? Yeah, what all I am supposed to deduct? Yeah, first one is, are you supposed to deduct tax or not? Yes, tax expenditure. When I say tax expenditure, that is current tax and deferred tax. Tax expense means both you are supposed to deduct it. That only attributable to equity shareholders. Sir, am I supposed to deduct, what is that? I say this. Extraordinary items, yes, extraordinary items also you are supposed to deduct it, and exceptional items also you are supposed to deduct it. Exceptional items also you are supposed to deduct it. Next, even preference dividend. Yeah, I'll write it properly. Preference dividend also you are supposed to deduct it. Okay, right. With respect to preference dividend, if the preference share capital is cumulative preference share capital. Cumulative means what? You have to pay, if not in the current year, next year. That's why if it is cumulative, deduct it. What do we say? Deduct it whether or not declared. That's it. Whether or not declared at AGM. Yeah, sir, AGM में discussion भी नहीं हो गया sir. तो क्या है? you have to deduct it. Because if not paid in the current year, at least it has to be paid in the next year. That means it's accrued basically. That's why deduct it. Yeah, if it is non-cumulative preference share capital, if it is non-cumulative preference share capital, yeah, if it is non-cumulative product, we say deduct only when it is declared. Only when it is declared. Okay. If not declared, don't deduct it. That is one. Yeah, fifth one. Fifth one, even like warranty or not warranty, voluntary retirement. Yeah, voluntary retirement expenses. Yeah, sir, why voluntary retirement expenditure are you saying separately? There are two ways actually. Some actually voluntary retirement expenses, VRS basically. Voluntary retirement is not governed by accounting standard 26. So it might have been capitalized as per accounting standard. As per IND AS, nothing doing, charge to P&L, that's it. Irrespective of the amount, you have to charge it to P&L. Yeah, some people must have taken it as a balance sheet item, deferred expenditure, they must have showed it. Yeah, even though you show deferred expenditure for the purpose of balance sheet presentation, but still for calculating of EPS, you have to deduct it. Even though it was not charged to P&L, it should be deducted for the purpose of computation of earnings per share. Okay, right. So voluntary retirement expenditure, what are we supposed to do? You have to deduct it, even though it is not charged to P&L. If it is already charged, sir, my company already charged, sir, very good. It's already charged means it is already there it is already deducted from the profit, na? Right. So this is the basic information with respect to what? Numerator. Now let us focus on the weighted average, correct? Now weighted average number of equity shares. Yeah, equity shares outstanding during the period. Outstanding during the period. This is the next small point which you are supposed to learn. Yeah, when I say weighted average number of shares outstanding, actually to calculate weighted average, there are two methods. Yeah, any one method you can choose it, because whichever the method you follow, obviously answer will be same. So you can choose whichever you want. First method, what we say, transaction basis. Yeah, transaction method. Okay, transaction basis means what do you do in this case? Right, what is the period between one transaction to another transaction? We will calculate period between one transaction to another. Yeah, we will be calculating. Suppose 1/4 we have some number of things. 30th 6 we issued some more. Yeah, say 30th 9 we have bought back, something like that. Now gap will be calculated from one transaction to, right, one transaction to, not another transaction, one second. One transaction to year end, sorry. Yeah, year end means 31st March is my year end. So from here to here, from here to here, from here to here, like that will be calculated. Yeah, next one is what? Balance method. In this balance method, in this case of balance method, what do you do? From one transaction, one balance to another balance, one balance to next balance, date we will be taking it. Means what? First we will say balance as on 1/4, sir, 10,000. Yeah, sir, on 30th 6 we issued, that's why it became 12,000. Say 30th 9 we bought back 1,000, so that's why it became 11,000. It has become. Okay, on 31st March, sir, on 31st March it is still 11,000 rupees, 11,000 shares only. Now, so 10,000 was there for 3 months, 12,000 was there for 3 months, 11,000 was there for 6 months. Just observe here, one balance to another balance will calculate. If it is a transaction method, from the date of transaction to balance sheet date, will be doing. Whichever the method you follow, you will be getting the same answer, right? One question was asked, sometime, 2 times, I think, 2 to 3 times they have asked in the examination, my dear, which date do you take it? Correct. Now, which date you take it? Yeah, this is the generally what you say, date on which money is receivable. Money receivable, not received. Yeah, right to receive. I have got right to receive when? That date. Not board of directors issuing the equity share capital resolution passing in the board. No, not that date. Which day I have right to receive? That date. Or cash already received, sir. You already received, whichever is early, actually, basically speaking. Received or receivable. I already got it, sir. That day only you are obligated to give them the shares. Na? Correct. That's all. Sir, but actually, sir, there is a convertible debenture, sir. Convertible debenture is going, it is converted, sir. It is conversion date actually in the convertible debenture prospectus. At the time of issue itself will tell. See, on 30th 9 2020 we are going to convert it. Correct. You have to take this date. Even though actual conversion may be taking place on 10/10/2020. This is actual conversion board of directors passed resolution. No, you are not supposed to take. Sir, in lieu of loan, in the place of loan we are not able to pay the equity, loan money, we are converting them to equity shares. Then which date I should take? When interest is getting stopped. Yeah, when the interest is interest is stopped accruing. Yeah, interest is stopped accruing. From which day onwards I am not getting interest, that means you become equity shares. It must have become already equity shares. That's why from that date from the which date onwards interest will not come to you. That date onwards equity shares are issued and the assumption you are supposed to take it. And you have to follow that. Got it? Next. Small issues are there. Sir, if it is a partly, what is that? Partly paid up share capital, sir. Partly paid up share capital. Then what are you supposed to do? Right. Convert into equivalent number of fully paid up equivalent number of fully paid up equity share capital. You convert it. Suppose I have got 10,000 shares of 10 each, okay, but only rupees 2 paid. Rupees 2 paid. Then what am I supposed to do? 10,000 shares into actually 10. Correct. 10 is the value. 2 only you collected. That's what divided by 2. Then what is that? Sorry, I think we'll type it. 1 second. What you get? 10. Then what will happen? 2 by 5, that means 2000. That means 2000 shares are fully paid. Yeah, fully paid up equity share capital. You should take 2000 shares for my numbers. Got it? Not the 10,000. Yeah, sir, I have got different class of shares. What you have got? Different class. Different class of shares. Yeah, what do you have, my dear? Different class of shares you have got. Okay, excellent. When you have different class of shares, what are you supposed to do? That means rupees 10 each is also available, rupees 5 each also available. 2 different class of shares are there. Yeah, what are you supposed to do? Convert into equivalent number of any shares. Any share. That means your choice. Whether you want to convert everything into 5 each, convert it. You want to convert everything into, 10 each? Yes, you can convert it. That is purely up to you. Got my point? Right. Accordingly, you should be doing the calculation. Right. Next, one more. Next topic is like bonus shares. Yeah, it is not actually with respect to bonus. Right. There are actually 4 circumstances. Okay. Which are all the 4 circumstances, sir? One is bonus share. Next one is share split. Yeah, share split. Next one is called share consolidation. Share consolidation. Yeah, that next one is called right shares. Right shares anyhow we'll discuss separately. See, under all these circumstances, what is happening? Number of shares, my dear, number of shares either increasing or decreasing. Okay, right, but without cash flows. Without cash flow. Money is not coming, but number of shares are going up and down. Correct, na? Right. Share split means what? 10 rupees each is their face value. Now we are converting into 2 each. See, now I have 1 lakh shares. Now it will become 5 lakh shares. Why, sir? Means, yeah, 10 rupees share became, 1 share is becoming 5 number of shares. Means 1 lakh will become 5 shares, na? 5 lakh shares. Right. Are you getting any new shares, new money? No money, but just simply number of shares are increasing. Bonus means what will happen? We issue, the number of shares goes up, but we don't receive single rupee. Share consolidation. Share consolidation means rupees 2 share rupees. Then we are making it rupees 10 each. Correct. So in this case also share consolidation. Number of shares are getting reduced. But is it buyback? No, I have not given any money to anybody. Simply consolidation. In case of right shares are there, but it is like a partly cash flow will be there. Partly cash flow will be there. But we will be considering to that part where there is no cash flow. I will explain that separately, I told you. Right. Okay, sir, under this circumstance, what are we supposed to do? What are we supposed to do? Na? Right. I will tell you example. Suppose sir, bonus issue took place. Bonus issue took place on 1/4/2019. Yeah, let us say my financial year is equal to 2019-20 is the current year. 2018-19 is the previous year. This is current year. This is previous year. Yeah. Right. Bonus issue took place on 1/4/2019 itself. Okay, my opening balance shares how many, sir? Let us say 10,000 shares are there. Okay, plus bonus. Yeah, bonus is equal to another 10,000 shares we have given. Last year how many were there? 10,000. Yeah, whatever the closing balance of last year, 10,000. Current year closing balance, because 10 plus 10, 20 it became. Correct. Even though bonus shares are being issued in the current year, what am I saying? Even though bonus shares have been issued in the current year, we should assume that these bonus shares have been issued in the beginning of the previous year. I repeat once again, even though bonus shares have been issued in the current year, we should be assuming that these have been issued in the beginning of the previous year. Otherwise, what will happen? There is no money inflow, but simply number of shares have gone up. Okay, number of shares have gone up. My denominator of last year is 10,000, current year is 20,000. Correct? Na? Automatically EPS will fall down. I cannot compare previous year EPS with current year EPS because of this bonus. Because of this bonus means I am not giving it for money. Simply number of shares have gone up. It is going to lead to wrong comparison. That is the reason. Okay, that is the reason. What are we trying to tell? What are we trying to tell? Right? You should restate previous year EPS should be it should be restated. Yeah, you are supposed to restate the previous year EPS. That is what I am telling. Previous year number is supposed to be restated. What is the assumption I told you? Even though bonus share or share split or share consolidation or rights issue, all these things took place in the current year, we assume that this incident took place in the beginning of the previous year. Accordingly, we will calculate weighted average number of shares. That is what the matter. Okay, right. If you don't do this, it will lead to wrong comparison. Okay, because of this, we are restating the previous year EPS as well. You have to restate it. Even though previous year financial statements we gave some number, but still we are supposed to restate it, change it. Restate means change it. Okay, right. Sir, with respect to right shares, yeah, there is a great logic obviously, but the point is, I cannot explain you obviously logic here, right? Simple, you just need to follow the formula. What are we supposed to do? Same thing. Previous year opening balance. Yeah, previous year opening balance shares. Multiply with what? With bonus factor, and I will tell you. Bonus factor we have to calculate. Previous year number of shares you are supposed to, previous year opening balance number of shares, how many were there? Sir, I had 10,000 shares. 10,000 shares, multiply with bonus factor. And procedure is same. That's it. Okay, sir, what do you mean by bonus factor? Bonus factor means what we'll say, I'll write here. Bonus factor. Bonus factor means come right market value of share divided by X right market value share. Theoretical X right they'll call. Okay, X right market value. Okay, come right market value will be available. Sir. Theoretical X right, theoretical X right market value. X right mark, how do you calculate? Yeah, fair market value of shares, okay, before rights plus amount collected, okay, amount collected on rights divided by total shares. Suppose I had 5 lakh shares, I issued 1 lakh rights, then here 6 lakh shares will come. And that is what theoretical X rate value. First you should calculate theoretical X value, then that will be taken to denominator. Then whatever the answer comes, this answer will be used for multiplication. Here I told you, you multiply bonus factor with the previous year balance number. Blindly you follow. Even though, because sometimes what happens, even if you explain the logic, people are getting confused. Yeah, that's why I don't want to explain that. You just follow the formula. End of the day, what you write in the examination is important rather than what you know. Logic, I know very good logic, sir, but I couldn't write in exam, sir. Useless, sir. Obviously, no, any day. That's why, my dear. Okay, right. So with this, we are actually through with, where is this? We are through with what? Basic EPS is obviously completed. Then let us focus on diluted EPS. We'll spend some amount of time, considerable amount of time. Okay, right. We'll cover obviously every point. With respect to diluted EPS, my dear friend, what did I say? With respect to diluted EPS. Yeah, with respect to diluted EPS, I have to explain you, there is one definition. What is the definition, sir? Potentially convertible, potential equity shares. Second. Yeah, potential equity shares. What do you mean by potential equity shares, sir? Potential equity shares is a contract or instrument, a financial instrument, will say financial instrument. It is a contract or financial instrument, yeah, which entitles or which may entitle, okay, what it will entitle, sir? Which entitle what, sir? It in an equity share, yeah, an equity share to the holder. To the holder of what? To the holder of the contract or financial instrument. What is the example? Example, I'll say convertible debenture. Yeah, convertible debenture. Yes, convertible debenture is, yeah, the holder of convertible debenture has may entitle, because if it may be at the option of the company or the option of the holder, they may be entitled. If it is mandatorily convertible, means pakka entitled. Optionally convertible means a choice, may be entitled. Getting my point? Right. A convertible preference share capital. Yes. Options. Yeah, like ESOP, basically. ESOP is an option. May be entitled. If the employees continue to serve for some number of years, or if the employees satisfy the performances, whatever they say, correct, na? Then they are entitled for, depends. It says it is a loan contract also. Yeah, it can be any contract. Means, suppose HDFC Bank has given a loan to our company. Correct. How much loan, sir? Let us say some 1000 CR they give. In the loan agreement, they said, if you don't pay me 6 months continuous, 6 months or 3 months, whatever, 6 months continuous default. Yeah, continuously 3 months you did not pay. Loan agreement, it may be mentioned, HDFC will convert the entire 1000 rupees or 1000 crores of money will be converted into equity shares. Correct? That means holder of the contract. Which contract? Loan contract. HDFC is entitled to get, entitled means not guarantee, may entitled, because it depends on what, if the company is not continuously 3 months, if they don't pay, then they are entitled. It is a contract which may entitle the holder an equity share. Yes, that is also potential. That is called potential equity shares. Okay. So in case of diluted EPS. Yeah, diluted EPS. First the word only, diluted. Correct. What is dilution means? What? basic EPS, no, basic EPS, sir, basic EPS is equal to 10. After, if diluted, when do you say it is a diluted EPS? Suppose diluted EPS is coming to 9, then I said it is diluted. Correct. No, sir, diluted, I calculated, sir, I got 11, sir. 11 आया तो how is it diluted? What is diluted? Basic is diluted. Okay, if it is coming 11, this is called anti-dilutive. Okay, what do you call? Anti, opposite. If it is anti-dilutive potential share, you should not consider it. Means what, sir? As if such kind of shares such kind of potential equity shares does not exist in the balance sheet, you take it and just calculate. That's why you have to think, what is it, dilutive or anti-dilutive? If it is anti means it is increasing the basic EPS. Okay, or if it is decreasing the basic EPS, then we call it as dilute. If it is increasing, then it is called anti-dilutive. Anti-dilutive potential shares should not be considered for our calculation of diluted EPS, because name itself diluted, not anti-diluted. Got it? Okay. Sir, how do you calculate? Here also same thing, net profit or loss, right, attributable to equity shareholders after considering dilution effect. Yeah, dilution effect of potential equity share. Okay, potential equity shares, you have to consider that, divided by, right, what is that, weighted average number of shares. Weighted average number of shares. Okay, again after considering dilution of potential equity shares. This is important. I'll tell you simple example. Say this is one balance sheet. Okay, yeah, say if net profit or loss for the net profit is equal to, let's say, 10 lakh. Okay, number of shares, that is weighted average shares only you take it, that is equal to 1 lakh. Okay, so then that is, what is that, basic is equal to 10 lakh divided by 1 lakh, that is equal to 10. Yeah, you got basic EPS 10. Yeah, here 1 lakh equity shares are there. Okay, that is equal to of 10 each, 10 lakh. Okay, but 10 lakh debentures are also there here, which is equal to 100 lakh rupees. Yeah, let us say this is 12% debentures. Okay, income tax rate is equal to, say, 30% for that. Got it? Now listen carefully. What is this? Is not just a debenture, it is convertible debenture. What is it? It is convertible debenture. It is 10 lakh convertible debentures, amount is equal to this much number is there. Right. What do I say? One number, I'll just change it. Okay, this is 100 lakh, I'll make it. Okay, 100 lakh, I'll make it. One second. This is 1 lakh. Okay, no problem. This is 100 lakh. Then answer is equal to 100 rupees. Okay, just numbers change. Now the question is what? What are we supposed to assume? What is this? This is potential equity share. Assume that this potential equity share is already converted into equity shares. Which day, sir? Which date potential equity share, then convertible debentures are issued, that date itself it is converted, sir. You should take an assumption. This assumption, assume that all potential equity shares are already converted into equity shares. Got my point? I repeat once again. Assume that all potential equity shares have been already what? Converted into equity shares. That is the first point. Got it, my point? No, not. Now, okay, if I take that assumption. But if you take this assumption, you have to, take the assumption for full calculation. Listen, now diluted EPS. Fine. How much was the profit? First basic, what? Basic mein 100 lakh was here and 1 lakh was down. Correct, na? Okay. Basic mein 100 lakh. This is 1 lakh. Okay, done. Now let us say these are going to be converted into 5 lakh equity shares. Assume some number. Okay, 5 lakh equity shares or 2 lakh equity shares. Any number is fine. 2 lakh equity shares we are assuming. Okay, perfect. See, if the 100 lakh debenture is not there, means I will not be having the interest also. Correct, na? Yeah, you will not be having interest. 12% into 100 is equal to 12 lakh. E 12 lakh must have already been deducted from 100 lakh because this is PAT. What is this? This is PAT. PAT means already after deducting the interest only, na? That's why. Then you have to add back. Why should add back, sir? I am assuming the debenture is no more. It is already converted. Then that means I will not be giving interest. When I don't give interest means my profit would have gone up. By what number? To the extent of interest amount exactly. Okay, done. But at the same time, do I get the tax will I be losing the tax benefit also? You have got more income means you have to pay more tax also, na? Correct. How much more income? 12 lakh. So 12 lakh into 30%. That is, you are supposed to pay 3.6. You have to pay more taxation. Plus, if it is converted, how many new shares would have come? New shares are coming 2 lakh. New shares are coming. That's it. Now, if you calculate, yeah, what is that? What is it coming? 108.4 it will come divided by 3 lakh. Yes, correct, na? Divided by 3 lakh means your answer may be somewhere around 3.23 something will come. I don't know exactly. This is some number. What is your basic EPS, my dear? Correct, not 32 point, let us say 32 point something like that. 32 point something will come. 32 no, 33 no, it's okay, doesn't matter. But 33, what was my basic? 100. And what is this? 33. Correct, na? That means is a dilution of basic? Yes. That means this convertible debentures are dilutive. Now in the P&L you should say very clearly, sir, basic is equal to 100 and diluted is equal to 33. Sit down. Right, sir, why should I show like this, sir? If you don't show this information, na? Yeah, if you show, suppose say this is current year 100, previous year is equal to, correct, na? Happened, 1 second, na? Yeah, so I told you, like say current year is equal to, just give me a second. Current year basic is equal to, say current year basic is equal to 100, previous year is equal to, this is 80. Yeah, that before year is equal to 60. What will be the user of financial statement thinking? Wow, see, EPS of the company was 60 or plus 20, plus 20 it has happened. Next year, pakka it is 120. They will be thinking like this. But while they calculating the basic EPS, we have not bothered about the convertible preference or convertible debentures, isn't it? Convertible debenture means what? They already paid money, right? It is just a matter of time. They are going to be converted into equity share. Debenture will cut and equity share will put. They will be getting. They don't pay again money, but the number of shares will be increased all of a sudden. Correct, na? Right. If you in calculation of basic, we don't consider potential equity shares. But are they sitting in the balance sheet or not? Yes, they are sitting in the balance sheet. Right. Any day they are going to, as per the agreement, any day they are going to be converted into equity share. That day they are correct. Na? It may be 100 correct. This may be 100. I agree to you. But all of a sudden this 100 may become 33. Na? This is a caution. Diluted earnings per share is nothing but a caution. If you don't give this caution, people will think of in a wrong fashion and they'll take wrong decisions. Accordingly, they may buy the shares, but without keeping these things in mind. Got my point? Yeah, that's why one should look at the basic diluted, because your what is that PE ratio, price earnings ratio. EPS is the basic information. Somebody calculated based on 100, somebody calculated based on 33. There will be a lot of valuation difference. Who did the calculation based on 33? Na, he will not buy. But who did calculation based on 100? He may buy. Correct, na? That's why we have to give the information. Yeah, same situation if it is convertible preference shares. Yeah, if it is, this is not debentures, assume it is a convertible preference share capital is there. What is there in this? Convertible preference share capital is there. Then what should I consider, sir? No problem. Yeah, then what do? We'll do preference dividend will be added, plus dividend distribution tax also will be adding back. because earlier dividend distribution tax was deducted. Now once it is converted, it will not be deductible. Correct? This is attributable to, we don't pay. It is not preference dividend. Then I do, when there is no preference dividend, why do I have a dividend distribution tax? But anyhow, dividend distribution tax, now I know that it is zero. It is already zero. But in examination, if they give, you have to add dividend distribution tax. Okay. One more thing, options and all are there. You just need to calculate number of shares to be issued for without consideration. You are supposed to calculate. There is a small topic which is nothing much actually. That's it, my dear. If my videos were useful to you, okay, please like the video, share it to your friends. Fine. At the same time, you please comment whether it is okay. I mean, are you happy with it? Not happy? Or I need to develop something? Correct? Something. Right? You can make a comment on this. Thank you. Thanks a lot.